Well, let's get started. I think one of the things we'll do first of all is to make sure if you're looking at the screen, what you're seeing right now is the Minnesota Revenue web page, the first page. And if you scroll down there and you look at the bottom of the page on the right side, there's a 2013 tax law changes. We're going to go there, and that's our list of different items that we've talked about this year during this last summer. So if you drop down to individual income tax, you can see that we have a bullet down there called same-sex marriage income tax and withholding information. So we're going to open that up. And so I'm going to talk a little bit about some of the general rules, but we wanted to make sure these resources were available to you. And we'll also bring up some more forms and schedules as we talk through this conversation. But today we're discussing the U.S. Treasury Department and the Internal Revenue Service ruling on the tax implications for same-sex married couples following the U.S. Supreme Court decision in the United States versus Windsor. Minnesota and federal tax laws apply equally to all married taxpayers who filed in our state. Last Thursday, the IRS ruled that same-sex married couples will be treated as married for federal tax purposes regardless of where those taxpayers live. The IRS also ruled that it would accept but not require amended or original returns from same-sex married couples for all open prior tax years. Now, this ruling implements the June 26, 2013 U.S. Supreme Court decision in U.S. versus Windsor by providing federal tax treatment to same-sex married couples the same as opposite-sex married couples. And as you know, a recent Minnesota law changed and allowed now same-sex couples to legally marry in Minnesota beginning on August 1, 2013. Under the IRS ruling and under Minnesota law, the term marriage does not include registered domestic partnerships, civil unions, or other similar formal relationships recognized under state law, whether between same-sex or opposite-sex individuals. Given the IRS ruling last week, the Minnesota Department of Revenue is providing additional information on state filing, tax requirements, and the tax treatment of certain employer-provided benefits. First of all, we want to provide some general information about Minnesota filing requirements for married taxpayers. Now, most of you as tax preparers know that Minnesota law requires taxpayers to use the same filing status on their state income tax returns as they do on their federal income tax return. For married couples, the choices are married and filing a joint return, married and filing a separate return, or in some cases, head of household. That filing status affects a taxpayer's filing requirement, standard deduction, eligibility for certain credits and deductions, and correct tax. This means that all of our tax forms in Minnesota, our electronic processing system, our withholding requirements for employers, and processing rules and instructions are set up to require and verify that federal and state filing status is the same. Further, federal law specifies that a taxpayer who is married as of the last day of their tax year is considered married for the entire year. So what does this mean for same-sex married couples? Minnesota will treat all married couples the same for tax purposes, including state filing status being the same as federal filing status, claiming the personal and dependent exemptions, taking the standard deduction, employee benefits, contributing to an IRA, claiming the earned income tax credit or child tax credit. The IRS ruling also affects all computations on the tax return that flow from the filing status of a married couple. For example, a married couple that files separate returns must both take the standard deduction or both take the itemized deductions. The same holds true for any Minnesota tax computations. Now let's talk specifically about individuals for tax year 2013 and going forward. We're going to go now click on the Minnesota tax information for same-sex married couples, and this chart, as you see, is loaded there to provide guidance. We're going to walk through this in just a minute. Now, as a general rule, you must file your Minnesota income tax and property tax refund returns using the same filing status as on your federal return. I think one of the things that you all will be doing is providing guidance to many taxpayers about whether to file, how to file going forward. And it obviously is an individual decision, and that must be analyzed by you as the tax preparer for these taxpayers. And we hope that this guidance will help you provide that guidance to them. So if we go to the chart, and we begin with the first line there. This is really sort of the basic general rule that if you were legally married in any jurisdiction and you reside in Minnesota for a full year, then you must file a Minnesota individual income tax return as a resident. Then your Minnesota return must be using the same filing status as your federal return. Now we're talking about for tax year 2013 and future years. So clearly the filing of the Minnesota income tax return must follow the filing status as your federal return. If you go down to the next line, this is for those folks who are not full-time, were not residents for the full year. So if you were legally married in any jurisdiction before January 1, 2014, and you reside in another state, not Minnesota, then you must file a Minnesota individual income tax return as a part-year resident or a non-resident. I think most of you are aware that the filing status means that you must file a return if your Minnesota gross income meets the state's minimum filing requirement of $10,000 or more for 2013. So if you're in a part-year resident, then you must file your Minnesota income tax return using the same filing status as your federal return, and you must file your other state return as directed by the state that you reside in if you do not reside in Minnesota. If you go down to the next line, and if you were legally married in any jurisdiction before January 1, 2014, and you reside in either Michigan or North Dakota, which have reciprocity tax agreements with Minnesota, then you must file a full year, and you were a full year resident of Michigan or North Dakota, and you return to your home state at least once each month, and you had only personal service, work-related income in Minnesota, including wages, salaries, tips, commissions, or bonuses, then your personal service income is not subject to Minnesota income tax. Therefore, you must file your federal tax return, you must follow your state return must follow your federal return, and you must file your Michigan or North Dakota return as directed by those states. And then finally, at the bottom, if you were legally married in any jurisdiction and you file a political contribution refund in Minnesota, then you do not have to use the same filing status as your income tax return. This is a little bit of a departure for the political contribution refund. This assumes that you were a Minnesota voter who contributed to a political party. You must choose to file that political contribution refund as either a joint application or a separate application, but you cannot file both. That is the one real difference in the federal filing status and the state filing status. To summarize then, for tax year 2013 and future years, you must file your individual income tax and property tax refund returns using the same filing statuses on your federal return. Now, if you expect to file your 2013 return as married, that can change the exemptions, adjustments, deductions, or credits that you can claim on your tax return. And you may want to give your employer a new Form W-4 or a W-4-MN to change your withholding status or number of allowances. As we'll discuss shortly, employers must treat withholding and benefits the same for same-sex and opposite-sex married couples. This includes making changes to withholding that an employee requests on a Form W-4 or W-4-MN. I just want to take a look now to see if there are any chat questions that have come up that we want to answer. Does anyone see any that are there that are ready to go? If not, we'll continue on. I think we're going to go ahead and go on. So continue. If you feel you have any questions, please submit those as we discuss, and we'll get to some of those as we go along. Now, I'd like to go to the next form that Janelle just brought up here, and that's for Minnesota employers and landlords. And here the general rule is, for Minnesota tax purposes, you treat employee benefits and withholding the same for same-sex and opposite-sex married couples. So going down to the box, if you're an employer in Minnesota and you offer health insurance, then for tax purposes for 2013 and after, you treat employer-paid health insurance premiums the same way for same-sex spouses and opposite-sex spouses. You do not count premiums for same-sex spouses as taxable wages for withholding purposes. If you're an employer in Minnesota and you offer flexible spending accounts for tax year 2013 and after, you treat flexible spending accounts and you use the pre-tax dollars the same way for same-sex and opposite-sex spouses. You do not count pre-tax dollars set aside or used for same-sex spouses as taxable wages for withholding purposes. If you're an employer, going down to the third box, if you're an employer in Minnesota and you have employees who reside in another state, and you offer health insurance or flexible spending accounts that cover spouses of employees, you do not count health insurance premiums or pre-tax dollars as taxable wages for Minnesota withholding purposes. Now, if you reside in, you have employees who reside in Michigan or North Dakota, where we have a reciprocity agreement, under those situations, you're not required to withhold Minnesota tax from Minnesota wages if they have provided you with a valid reciprocity exemption certificate or a Form MWR. Going back up to the general box, if you're an employer in Minnesota and you issued Forms W-2 to employees in prior years, you do not have to issue corrected Forms W-2 to your employees reflecting a change in taxable income unless the IRS requires it, and they have not done so yet at this time. If you're a landlord in Minnesota, going to the bottom of the box, and you complete a certificate of rent paid, a CRP, for renters, then for 2013 and future years, you must issue one CRP to same-sex married couples who rent from you. I think that's what all we'll cover now for the employers and landlords, and we'll go to the final box on the page here, and this is for prior year tax returns before tax year 2013. And the general rule is, if you amend your federal income tax return with a new filing status as married, you must also amend your Minnesota return to use the same filing status. So the basic premise here is, if you were legally married in any jurisdiction in a prior year prior to 2013, and you filed an amended or original federal return for a prior open tax year, then you must also file an amended or original Minnesota return for that year using the same filing status on your federal return. This is following our general rule for filing status for 2013 and also for prior to 2013. Now, if you file an amended or original federal income tax return with a married filing status for a prior open tax year, and you also filed a Minnesota property tax refund, homeowner or renter, for that same year, then you must also file a joint amended Minnesota property tax refund for that year. So if you were married and lived with your spouse for the entire year, and if you or your spouse got married or lived apart for part of that year, you may amend your property tax refund to file jointly. So this just is highlighting the fact that there are certain requirements that take place when you file an amended federal return. You must file an amended state Minnesota income tax return, and you must also file an amended property tax refund claim as well. Now, if you filed an amended or original federal return for a prior open tax year, and during that year you purchased health insurance coverage for your same-sex spouse from your employer on an after-tax basis, when you filed your amended or original Minnesota return for that year, you may exclude the amounts paid for that coverage from your taxable income. Now, if you have not filed for a past year, you should do so as a general rule. We like to encourage people to keep their filings up to date. But if you must file a Minnesota return using the same filing status on your federal return. Now, in some situations, for folks who have not filed returns, we issue what we call a Commissioner Filed Return, or a CFR. And if you decide to file a return for a prior year, you must replace that Commissioner Filed Return by filing your own Minnesota return using the same filing status on your federal return. To summarize, if you choose to amend your federal income tax return with a new filing status, you must also amend your Minnesota income tax return to conform to that new filing status. If you filed for a property tax refund in a prior year, you must also amend that property tax refund claim as well. Minnesota tax laws that apply to married couples do not apply to registered domestic partners, civil unions, or other similar relationships that are not recognized as marriage under the federal ruling. Now, while we have mostly focused on income tax and withholding today, I'd also like to note how the IRS ruling affects estate or gift tax. All items affected by the decedent or donor's marital status and reported as part of a Minnesota estate or gift tax return must be consistent with the marital status reported on the corresponding federal return. We've covered a lot of ground today, but our main point is that Minnesota and federal tax laws apply equally to married taxpayers who file in our state. They must use the same filing status on their state and federal tax returns, and the employers must handle withholding and the tax treatment of employee and spousal benefits the same for all married couples. This concludes our overview of the Minnesota tax effects of the recent IRS ruling on the treatment of same-sex marriages. Well, I just want to thank you all for taking the time today to listen in, and your questions are really helpful. They help us understand concerns and practicalities that you're aware of that we might not be. So to the extent you have additional questions, please contact us. The contact information is
651-296-3781 if you're in the Twin Cities, and 1-800-652-9094 if you're outside of the Twin Cities.
And obviously emails work as well. If you want to send in emails, we really appreciate that. And so thank you very much, and we'll sign off at this time, and have a good day.